Hello traders, today I'm going to discuss which indicators I use to day trade the S&P 500 futures. When do they work? When don't they work? Why do they work? How do I use those to time my entries and exits? I'm going to cover all that information today, but before I get started, if you find this content to be of use to you, please click the subscribe button on my YouTube channel and give this video a thumbs up. It's going to help me reach more traders, and ultimately, that's all I'm trying to do. So if you take a look at my chart right now, this is the SPY. I use the SPY in all my videos because everyone has access to these quotes. All the brokerage firms provide it. You don't need any additional futures data feeds. So I reference it, and it also is a continuous contract, meaning that you can watch it from start to finish. It's not like the futures contract where your charts are abrupt and they end and you have to transition from one quarter to the next. So the S&P 500, I use the SPY chart, and it mirrors what the futures are doing anyway. The indicator that I currently have on my chart is called OneOP. It's an indicator that I developed. It took me years to develop it, and I'll explain why I like using it. It is the only indicator that I use. Keeps my charts really clean, and it is early, so it is predictive, which makes it very unique. You won't find another indicator like it. Why don't I use other indicators? Well, they lag. Almost every single indicator lags because it is a smooth moving average for the most part, or an oscillator. And by the time you get a trigger on any of those other indicators, the price is already moved and the opportunity is gone. The other thing that I use in conjunction with this indicator is price action. Price action is immediate. And so when I'm day trading futures, I am absolutely, positively always using price action as the primary reason for me to enter and exit trades. And as you've heard me say before, how we get from point A to point B tells me how strong that trend is, or how weak that trend is, and when I might be looking for reversals or continuations. So price action, please understand, price action is first and foremost what I use to determine if I'm going to be entering or exiting S&P 500 futures trades. Secondly, if this indicator is so fantastic and it is so great, why am I offering it to the public? Well, there's interpretation required, and that means that you can't simply use this as a buy and sell indicator. If it were that good, if any indicator that anybody sells on the market were that good, all they would do is they would trade the indicator. They would program the indicator so that they can automate entries and exits, and they would sit back and they would make billions of dollars. They would never release something like that to the public. I've tried to program this. Unfortunately, I haven't been able to because it requires interpretation, and you have to be able to read price action. That's something I can do mentally, but I haven't been able to figure out how to program it. So there is no holy grail. That's another message I want to make very, very clear to you. Oh my gosh, if I just use this indicator, that's going to be the key to my success. Plenty of people out there selling that BS. Okay, so I am not going to tell you that the only way you can be successful trading S&P futures is if you have this indicator. It's simply not true. I also don't just trade the S&P futures. What this indicator helps me do is it helps me to gauge where I'm going to have trouble spots within the market. So let's say that we've got a nice little market rally and I'm long stocks, and all of a sudden I see the indicator spiking, peaking, crossing over. It tells me that I need to manage my long positions fairly carefully because I could have a market drop pending. So this is not the holy grail. This is not the silver bullet solution. This is not something that you can just come in and overnight you're going to have instant success. However, with all of that said, this indicator dramatically improves my odds of success. It helps me time all of my stock entries and exits during the course of the day. When does it work really well? Well, it works well, as you'll see, when we have big spikes in the indicator. So, and I'm going to be going through about 3 weeks of price data. So I am not cherry picking. Oh, look, here's when the indicator really worked well. I'm not going to be doing that. I'm going to go through 3 weeks. You'll see every single day, and you'll be able to see when it worked and when it didn't work. When we get these really big spikes and we get these nice, clean, crisp crosses, this is when the indicator tends to be most reliable. It also tends to be very reliable when we have really decent volume for the overall market. When doesn't it work? It doesn't work particularly well when you have a choppy, sideways, directionless market. Let's say a market where you have the S&P 500 trapped inside of the previous day's range, an inside low volume day. Guess what? No indicator works well in that environment. There's really nothing going on. It's like trying to fly a kite when there's no wind. Okay, it's going to be very difficult for you to gauge when to enter and when to exit trades. You need to have that strong tailwind, because then we know institutions are involved, and that's when we know that our ability to predict future price action, future price movement improves. But when the market is in this light volume malaise, that's all program driven. And the programs simply search for size on the bid, and when they find it, then they know that they can go the other way. And so the program will test the upside. When it eventually finds supply, you'll hit resistance, and there's just this choppy back and forth type of price movement. So again, when you have very low volume days, you should be trimming your futures trading. When you have an inside day, you should be trimming your futures trading, because those are going to be relatively low probability days that are all program driven, and the momentum can shift at any point in time. As always, if we have a strong trend day for the S&P 500, let's say there's a big news event that came out and we see really nice, tight, orderly, directional movement, well, then we're going to be trading futures, and we're going to be trying to stick with that position and ride that momentum higher. But we'll be able to tell when we have those days based on the candles. We're going to see nice consecutive stacked green candles. That's going to tell us that the trend in that direction is very strong, and there will be false signals by this indicator. But when we combine price action with the indicator, we can tell, hey, there's a bearish cross coming on this indicator during a strong bullish market trend. So we should ignore the indicator then, and when it runs through a bearish cycle without any kind of price movement, then we know that this trend strength is strong and that the next bullish cross is going to produce a really good signal for us. We call those divergences. 80% of the time, as you'll see, the indicator is early, which is really nice. My gosh, how would you like to know that there's an early warning sign that price might be cresting? Really big advantage for us if we can be early and we can time our exits on our stock positions or on our futures positions. So without me getting too far into the weeds, let's just take a look at the price action, and I'll show you how it works. And when we do get these divergences, they're also very powerful. We know when to look for them. And when we have them, all it does is it reaffirms that trend strength. So 80% of the time, these signals are going to be very good. They're going to be very reliable. 20% of the time, we're going to see these divergences. And that's when that confirms the trend strength. We'll already be seeing that in the price action. So let's check it out. And I'm going to be pointing out, I'll use the crosshair tool on the chart so that you can see that the signals are early. They're not coming in the middle of the move or at the end of the move like most indicators do. And one final note, this is proprietary. So I have not released this on any other platform. You can only try it on Option Stalker Pro or Option Stalker, my web version. And it is optimized for the S&P 500. So let's go back. I am on September 2nd. And again, when we have a cross below zero, so the indicator is below the zero line, which is this gray line right here, and we get the red line crossing above the blue line, it's like any other oscillator that you would use or any other kind of trade signal where you have a fast line and a slow line. When the fast line crosses above the slow line, you have a buy signal. When the fast line rises above zero and you have a cross of the fast line below the slow line, so the red line is always the fast line, then this would be a sell signal. Okay, you go through a cycle, you have to go below zero, below that zero line, to consider that cycle as being completed, as being finished. And then when you get your next cross right in here, that would tell you that we're now on a buy signal. And so that's all I'm going to be doing, is going through and looking for where these buy signals are, where these sell signals are, and what did the market do during that period? Was the indicator early, and did it provide utility for me? That's it. That's going to be so simple. And if you look at this chart, the one thing that should stick out on you is the blue line in the middle of the chart. That's VWAP. Everybody's got VWAP on their chart if they're day trading. The only other thing I have is the 1OP indicator. I do know if the volume's heavy or not based on another indicator that I've developed, 1OVOL, but you're able to do that using any other platform as well. So again, this is not the holy grail, but I think you're going to be pretty impressed by what you see. So here we've got a market decline is what we're starting with, and we've got this bearish cross right here, and now we have a bullish cross right in here. So we are below the zero line, this little gray line right here, and we've got the red line crossing above the blue line right in here. Nice. Now we have a nice little rally up right in here. We're starting to see that, yes, we've got a bearish cross right in here. Right in here. There is absolutely no sign that the market is going to be in trouble here. We've got nice stacked green candles, but all of a sudden, this indicator is telling us, hey, you know what? We could see a little bit of selling pressure in here. If you're trading futures, you might want to take profits, or you might simply want to wait for some price confirmation out of the S&P 500 or the SPY. Well, what would price confirmation look like? Well, I like to use the open of long green candles. So if I've got a long green candle like this and the open fails, okay, that would tell me that yes, this is going to be a pretty legitimate little move lower. There were buyers here at the open. They were able to fuel that move higher, push the market higher, and now those buyers have been exhausted. They're not there anymore because we're trading below that level. So I always use these long candles as a landmark, as a reference point. That's just part of reading price action. So I don't want to get too much into reading price action, but long candles are landmarks. If you have a long green candle and that close, that high of that candle is preserved, and then you get follow through 2 or 3 bars later, you know that candle was legitimate. Those are legitimate buyers. You get a long green candle, and in the next 5 or 6 candles, that entire candle is erased, then you know that was just a head fake. We got a nice little bearish cross right here. Again, early in here, we got a nice bullish cross. Let's use the cross here, and let's see how timely this was. Right in here, it's telling you, hey, this is going to be a good opportunity to get long. The other thing that I want to mention to you is that when you're trading futures or you're trading in general, your objective is not to try and pick every wiggle and jiggle, because I see traders trying to do that all the time. They're trying to find every single move. Instead, what you should be looking for is situations where you have a number of influences coming together. The tumblers are lining up across multiple time frames, and they're all in agreement. So there could be days when we see bullish cross, bearish cross, bullish cross, bearish cross, but they really aren't producing. And sometimes when these cycles that I'm going to be showing you, a bearish cycle, when it doesn't produce, that gives us good information that the next bullish cycle is more likely to produce. So again, I'm going to try and go through that analysis. And again, because this is a little complicated to understand, one of the reasons why I haven't been able to program this and to automate all of my trading, because it requires a trader to evaluate price action and to know which signals are good, which ones are not good, which ones they should act on, which ones they shouldn't act on. Here we've got a nice bullish cross right in here. That tells us that, yes, we should be long in here. Now we get a big market gap up overnight. Okay, so this is a 5-minute chart. You can see how we have a bearish cross right here. And the market's been in an uptrend recently. That's the current backdrop, is the market's been in a nice, decent rally. And so when you have a gap up to a new relative high, you never want to chase that as a day trader anyway. You always want to wait to see if you get some little type of pullback into the gap, because that's going to provide you with a better entry point, and because there's always a good chance that that gap up is going to reverse. So in this particular instance, OneOption happens to agree, and it says, hey, you know what? You should wait for this bid check to take place. And so we get a bullish cross right in here. Okay, so now you would be getting long. Well, you can see, yes, from this point here where you get your long green candle to a new high of the day, if you got long, you're watching for follow through. Just like I had mentioned earlier, long green candle, closing on its high, we want to see follow through in the next couple of bars, and we get it. So you could be long in here, and now all of a sudden you're starting to hit resistance. Tiny bodied candles tell us that sellers are keeping a lid on the action. If they weren't there, we would be seeing extended long green candles continuing higher and continuing higher. We didn't see that. So sellers are keeping a lid on the market right there. And so we're still long this position from right here. Okay, we've got confirmation. Let's say we're long right in here. And now we're starting to get a breakdown below this little compression. We're still not overly concerned about this. There's no reason to, but we have a bearish 1OP cross. Okay, if I'm trading futures, I have to really manage my risk. If I were trading stocks and I had a super bullish stock that was climbing higher, it's got relative strength and volume, it's got a nice D1 breakout, I can try and weather this little storm. But if I'm trading futures, I have to actively manage my risk, and I have to go under the premise that this could materialize into something more than just a little dip. So exit the trade, wait for the next cycle to run, and see what happens. Evaluate. And in this particular case, you can see we get a bearish cross right in here. Hey, that was a pretty decent bearish cycle. There's our below the zero line right there. So we're below zero. We get a bullish cross in here. And we can see as we review that previous bearish cycle, hey, you know what? It produced. That looks like pretty legitimate resistance up here. And the market was able to come back well below VWAP. So I'm going to respect the fact that sellers have some say in the matter. This is not a go-go, gotta have it, runaway market. Now we go through a bullish cycle in here. Just barely gets to zero, so there wasn't really much here. I would not consider that a great valid signal because it just got to zero. Again, remember, we're trying to get these larger spikes and peaks and crosses. Those tend to be more reliable. I would still consider this all being part of the same cycle in here. So we get a bullish cycle. Now this is where I was mentioning earlier that we have what I call a benign cycle. So you get a bullish cycle, everything looks good, but it doesn't produce. It should produce. When we get bullish cycles, we expect the market to go higher. When it doesn't, there's information that we have in that. It tells us that the next bearish cycle is more likely to produce. So we go through this bullish cycle, and you can see from this point right here where we get our bullish cycle all the way to right here, it didn't produce anything in this stretch. It was dead flat. So we go through an entire bullish cycle with nothing happening. And now we've got a bearish cycle. And look, the market is right on its low of the day. All right. That tells us this bearish cycle is likely to produce. We'll continue to go forward and see how things unfold. Yes, it does continue to produce, and it produces all the way up until this point right in here. So now we've got this dip and this nice little cross right in here, tiny compressed candles. Okay, what does that tell us? That tells us that the market, and we look back and we do technical analysis and we use price action. So we filled in the gap and we tested that bid, and it held firm. It didn't budge. And now all of a sudden, After the gap fill, we know that there are buyers there, because if there weren't buyers there, we would be seeing long red candles continuing down during this bearish cycle. Didn't happen. Okay, so we've got some support forming. Hey, here we go. We've got a bullish cross right in here. This might be a nice point for us to try and buy some futures on the notion that our downside is limited and our upside has decent potential, at least to get the VWAP. Boom. Look at how nice that bullish cross produced. So we're going to fast forward, go into the next day. Maybe I shouldn't show you too much of the chart either, because then you're going to be looking ahead and you're going to be cheating. Well, we can't cheat when we're trading. We don't know what that price action is going to be. We only know what's happening right here, right now. So I'll try not to forward too much, and I'll just interpret the signal, and then we'll see what the market does. I can't remember what the market did 3 weeks ago. Get your opening gap up here. We can expect that there's going to be a bid check. We got a nice bearish cross right in here. Market not able to advance. This tells us if I'm looking to trade early in the day, I'm not necessarily going to be shorting, but if I'm looking to buy because the trend has been higher longer term, then I should hold off on my buys. Let's see if this gap fills, and then maybe an opportunity will present itself. So now we get this little sell-off right in here, and that's consistent with this bearish cycle. And if I look forward, the next bullish cycle is not really until about right here. Okay, that's where we get this nice dip and this nice cross. What happened from the time of this bearish cycle right here until this bullish cycle right here? Well, the market rallied. It actually made a new relative high. That is consistent with a benign bearish cycle, and even this is what I would call a bullish divergence, meaning that the indicator is going down, 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 but the market is going up, up, up. Ooh, that's a sign that there is a pretty decent amount of buying in here, that there's a decent tailwind, and that I should expect that this next bullish cycle right here is going to produce. What we'll also notice in reading price action, again, how we get from point A to point B, very, very important. That tells us trend strength. Well, here we can see nice consistent price movement. Are there an overwhelming number of green candles versus red candles? Not really. It's kind of choppy. You can see that there are tiny bodied candles. We get a nice green candle, we get a red candle, we get a green candle. So it's just this kind of gradual float higher. So in here, at a high of the day, with this type of price action that I've seen so far, would I be aggressively trading futures? Do I sense that this is going to be a great buy signal? It might be worth taking a position in, because we had this long green candle and we had some follow through. I would use the open of that long green candle as my stop out point. Okay, that needs to hold. And ideally, I don't want to see more than half of this long green candle retrace, but I certainly don't want to close below the open of that long green candle. So that's my gauge. And if I'm going to be taking advantage of this move right here, let's see how it played out. So I take a small futures position. I've got a gradual float higher. I've had a benign bearish cycle that didn't produce, and the market actually went higher. And let's see what happens. Well, we get this continuation. So this bullish cycle is producing, and it's continuing, and it's continuing. Here we go. Now that bullish cycle has run its course. Oh, I see. I have more price data. This looks like a gradual float higher to me. I mean, there's not a lot of buying or selling, and you can see long red candles and long green candles. So this looks like it just the type of move that's going to continue to go higher. I'm looking for an exit point for that bullish trade that I took in here. Am I up money? Yeah, I'm up actually pretty nicely, about 15 points. So I'm going to stick with the position. I'm going to be using price action to guide me. But because I've had this bearish cross in here, any kind of trouble, and I'm going to be looking to take gains on my futures position. And so we can see that, oh, well, look what happened. And this is actually working out pretty well, because we're just going the duration of a bullish or a bearish cycle, and then we're seeing what decisions we would be making at that juncture. So in this case, I'm just sticking with my position. I'm watching for any kind of long red candles, any big retracement, anything that might tell me that there is resistance forming. And if I get this type of price action, by the way, if I get a couple of stacked long green candles that break out to a new high, I know that there have been retracements the entire way. I'm going to take profits on that because that could be a buying climax. And that's one way that a pattern like this would end, is with a couple of long green candles stacked one on top of the other. Those are usually triggering exit points. So they're triggering buy stops for people that have been short, that put their stops above resistance. So they're short, they put their stops above resistance. That resistance is breached. You get those buy stops triggered. They feel this move higher. You get a couple of long green candles, and then that's the end of the move. That's the buying climax. So if I see anything like that, again, given the price action that I've seen all day to this point, I'm going to be taking profits on the position. But I didn't see that. Okay, so I'm still sticking with the position, and now I've got a bearish cycle. So again, we go through another cycle. This one's pretty benign, goes from here to here. Actually, you can consider that to be a bullish divergence because the market did continue to advance. And now I've got a bullish cycle. So I'm expecting at this point that the bullish cycle is going to continue to fuel the market higher. This should be a good bullish cycle, but I'm just sensing we're going to be close to the end of the day. So I'm pretty much riding that position. And there is the end of the day right there. Entered the trade on this bullish cycle way back in here. There wasn't really anything great happening. And that is 646 to 649 almost. So that's a 30-point gain on this little sleeper of a day. Really nice stuff. Again, get through that nice bullish cycle. Price action suggests I should stick with the position. I've got a bearish cycle coming up. Let's be cautious. Let's see if we get those stacked green candles where I could take profits. Didn't get that. Didn't get any kind of long red retracement candle, so I'm not worried about that position. I continue to hold it. I weather that bearish cycle. Now I've got a bullish cycle, and I'm expecting good results, and I get them. That's how the indicator works. Let's keep going. I don't know how long this video is going to be, but I hope that you find this to be educational because we're going to have a number of days to get through. So now we got this big gap up. What do we know about big gaps up to a new relative high? We need to be super careful. So in this particular instance, I think this was a jobs report that came out recently. Very weak jobs report, kind of puzzling that the market would rally on news like that. And there we go. There's our bearish cross right in there. And we're starting to test the low of the day off of that first candle. So we've got a warning sign. And now we're into that gap right in here. So by here, you easily could be taking a short position. I did take a short position, by the way. I do remember this day because this was a dramatic move. Then when we have big gaps up to a new all-time high, that's where we can expect profit taking. Consistent with that, yes, this was a really decent short. All the way down into this price point right in here, you had an indicator telling you stay short. But now all of a sudden, again, nice, big, deep troughs like this in the indicator, nice, clean, crisp crosses in the indicator. Those are signs that you should pay attention to what this indicator is doing because its reliability is going to be quite high. And what do we see with the volume down below here? Oh yeah, really good volume. That tells us also that this indicator is much more reliable. What do we know about price action, by the way, when we're trading futures and big moves like this, especially when they come early in the day? When you get a very steep move like this, those are going to produce big bounces because they tend to be overextended. Also know that the longer term trend has been up, so we're a little cautious with our short positions. We've had really nice gains from, let's say, 651 all the way down to, we're not going to hang on to it whole ride, but that's 80 points. That's 80 S&P points. Yeah, you should take some gains, I would say. That's a really good move. So now we get a bullish cross in here. Would I necessarily be trading this bullish cross? I could. I mean, as we see now, it's going to turn out to be a pretty good signal. The main thing is it's telling us if we're short stock, this is not a bad place to take your profits. You've had really nice gains, take them. See what that bounce looks like, and then you'll be able to determine if you want to reshort on the next bearish cross. So we get this nice Little bounce right in here. The indicator predicted this bounce, and now we get a bearish cross right in here. That tells us, hey, you know what? Now I might be looking to reshort those really weak stocks because this was a decent move. But I want to see if this cycle produces. And what I'm thinking in my mind is that we're below VWAP in here. Couldn't get back to VWAP during this bounce. All right, good. That's important to me because it tells me that sellers are keeping pressure on the market. They're not waiting for it to get back to VWAP. They want to sell right now. What would I like to see happen during this bearish cycle? Well, after a big down move like this, I'm looking for brief, wimpy bounces with mixed overlapping candles. Why? Because that tells me the buyers don't have control and every little green candle is retraced. That's the red candle. Every little green candle retraced. So it's those mixed overlapping candles that tell us that the bounce is not really strong and that I could expect on this next move that when I get this sell-off at very minimum, I'm expecting to test the low of the day and ideally blow through it. And I don't want these bounces to last more than 20, 30 minutes. If they last longer than that, and we start getting into the 45-minute range to an hour range, that tells me that there is support. Buyers are supporting the market. And we don't want to see that, okay? Again, this is such an important point. Buyers have been in there saying, you know what? This is not a bad entry point. That would be the signal. And we're in there supporting it. You can't just knock us out of the way. You don't have that much firepower. Now, if sellers were truly in control, what you would see is a nice little bounce in here, and you might not even get more than 20 minutes out of it, and then the next leg lower starts, and the next leg lower is fast and furious. Didn't really see that, but we do have a bearish cross, bearish cycle, heavy selling in here. Yeah, I would take a short position right in here. So let's fast forward and see what it tells us. Where would I stop this trade out? Well, I would stop the trade out at VWAP. I'm pretty close to it. I don't expect to get back to that point. As this bearish cycle unfolds, the price action that I'm looking for is nice, long, red candles without much in the way of retracement. That tells me that sellers have control and they are in power. What do I see? That's not what I wanted to see, okay? Next, overlapping candles. Again, we should have been able to test the low of the day very easily here. We get a little bit of selling pressure in here and then a bounce immediately. We get another nice little round of selling pressure in here and then a long green candle. This is not good from a short perspective, so I'm going to exit already. I'm not going to hang on to this position, and that's actually how I traded. I can remember this day. I can't remember the ones after, but I do remember what happened during the jobs report. So we get this little choppy, mixed overlapping candles, and now all of a sudden we have a bullish cross as well. Okay, I'm going to pay attention to that bullish cross because I'm not seeing the price action that I needed to see during this bearish cycle. This is what I would call a benign bearish cycle. That tells me that this bounce could have some legs. Didn't see the follow-through selling here. I know that there are buyers in here, and it's lasting a lot longer than it should have. This move is lasting now. There's about an hour, almost 2 hours. In 2 hours, the sellers that were here have not been able to knock this market down. They don't have the firepower for it. And now I've got a bullish cross. All right, am I going to be buying right here? I could. It's going to put me on the side of the long-term trend. Even after this heavy selling, I could. Or if I'm still kind of sticking with the short side, thinking that was such a horrible jobs number, I just can't get long right here. Well then, okay, you're at minimum, you're watching. You're not in, you're not long, you're not short. You're just going to watch. You're going to see what the next bullish cycle produces. If you're very bullish and you've been a buy the dip person and you've got some strong stocks that have been able to weather this entire move in here, yeah, those stocks have shown you that they want to continue to move higher. This would be a good place to enter them, which, by the way, is how we trade. So now you get this bullish cycle in here. Would I consider that a decent bearish cross? No, I really wouldn't, because it barely got above zero. I mean, yeah, it got to zero, but it didn't really get above it. And what has the market done since that big drop anyway? Now we're compressing. And now at this stage of the day, we kind of have a feel for what is going to happen with the market. Not a whole lot. So you get this nice gap up, you get this big sell-off, they smack it down, they fill the gap. This is a gap reversal. You had this bearish news, and now we're just in sit and spin mode. Mixed overlapping candles. You can see there's the high, there's the low. You're not going to get much off of this. And now we're almost through the entire trading session at this stage. So the bullish and bearish crosses, they're not really going to mean a whole lot of anything. But if you had a nice strong stock, this is telling you that there is support, and you could have bought some of those stronger stocks, and you could have leaned on that relative strength. So we get a bullish cross. It's benign. Is this bearish cross going to produce? Probably not. It just got back to zero. Is this bullish cross going to produce? We're barely below zero. I've seen this compressed type of trading. Yes, I could get long stocks in here. Now we have a bearish cross and a decent move above zero. Am I expecting this to produce? I'm not expecting a whole lot of anything at this point in time. So the answer to that would be no, I wouldn't be trading this. And we do get a nice little market rally in here. And so this, not that I would be trading it, but this is another example of a bearish divergence. So it's saying be cautious in here, be cautious in here. Well, the market actually did rally into the close. So it didn't produce. That tells us that buyers are fairly strong in here, because this suggested that we should see some selling, and we didn't. We actually saw a little bit of a move higher. So again, from this initial move in here, I wouldn't be buying that, because I'm going to respect that move. And this is a very steep, dramatic move down. So I should expect a decent sized bounce. And I get that bounce in here, and I didn't get the price action in here that suggested that the market was going to be really weak and that it was going to come down and test the low. So if I try to short in here, I'm out. Now I'm watching, and as I get through the trading day, I'm realizing that there's really not much that's going to be happening the rest of the day. So unless I see some decent price movement out of this compression, I'm not going to really pay attention to it. My trading day, for all intents and purposes, is done.